European bond markets were again at the center of attention and guided trading sentiment this week. In Italy, 10-year bond yields again pushed above the 7% mark, and 6-month bonds hit an astounding 6%. At the traditionally safer end of fixed income, German bunds crossed UK gilts after a particularly poor bid-to-cover ratio in Frankfurt. As a result of the Eurozone benchmark's risk rise, the common currency slid in all major pairings save the Swissy. European politicians Monti, Merkel, and Sarkozy even met on Wednesday to discuss issuing a Eurozone-wide bond, but ultimately rejected the idea. In other macro news, Chinese factory output dropped to its lowest level in 32 months, and U.S. durable goods orders came off 0.7%. Third quarter GDP from the U.S. was also revised down 0.5% to 2%. Equities continued their sell-off through this week, and volumes waned across the board when U.S. markets closed Thursday for the Thanksgiving holiday. Travel operator Thomas Cook saw its shares lose over 70% after they renegotiated their bank facilities. Research in Motion shares also suffered after a trio of analyst downgrades. And finally, the estimate of beleaguered broker-dealer MF Global's debts has now doubled, further sucking confidence out of the wider financial sector. In terms of major corporate news next week, jeweler Tiffany's reports third quarter earnings on Tuesday. Northumbrian Water and Britvic offer interims Wednesday, and Kingfisher updates investors on Thursday. Now, there are two sets of macro data next week, which have the potential to significantly impact markets. First up are Japanese industrial production figures, which come on Tuesday. Then, arguably the most important reports of the month, the employment news comes from the U.S. in the form of the ADP private sector report on Wednesday, followed by the non-farm payrolls report on Friday.